the entire initiative behind bringing an ETF for Bitcoin to get that exposure was to remove any last possible friction and pain points that investors may have had, whether that was custody, whether that was the ability to access that within a garden that had gatekeepers and analysts, whether that was just simply those who needed regulatory. And we all know that cost is always a friction point. It's always a pain point. It's always a deterrent. You know, ARK is bringing its ARK in 21 shares. Our partner is bringing its ETF to market at 21 basis points and waiving fees for the first 6 months or $1 billion. And the reality behind that is that, yes, customers have won from the increased competition. For most, we think this is going to be far cheaper than having access to directly trade crypto when you think about the total cost between custody, the cost of trading and spreads. But what it's really about is removing any of the last barriers that may have kept people from looking at the space. And now that they can access it, at what we think is a very attractive price point. We believe that it's going to increase the number of people, including those who have maybe been a bit curious about the asset class and about this particular asset within that asset class, and are now going to double back and do the research and do the work to find out. And I think that that's ultimately the most important thing. This is not really about maximizing profit. This is about the fact that at ARK, we've been committed to this asset. We've had exposure in our ETFs since 2015. This is the really 9 years into a journey to make sure that we continue to provide the research, and we effectively, this has become a public good that we want to make sure all investors have access to.
But what, to your mind, Tom, is the investment case for a Bitcoin ETF today? Is it an inflation hedge? Is it a digital currency, competing with CBDCs? What is the exact use case that you're trying to sell as the underlying to this ETF? Because obviously you waived the fees for now, but you're looking at drawing in almost $5 billion, correct me if I'm wrong, $5 billion in assets under management, after which you would increase your fees by a bit.
We're certainly, yes, of course, we still think that the end fee of 21 basis points or 0.21% is extremely attractive, very affordable for investors. And so even after the initial fee waiver, we feel very confident about where the product's being priced. When I think about it, though, from an investor standpoint, I think the answer is yes to most of the above for what you're saying. During the regional bank crisis in the United States, what we saw is that Bitcoin can be both a risk on and a risk off asset. It can be used for both inflation and in fears of deflation. Of course, it's been far more talked about that it is the complement to gold, the digital gold store of value, and certainly that holds up. But when we saw banking crisis and certainly a regional banking crisis and scares in the United States, Bitcoin also did very well. It's reflected in the momentum and the performance that we've had this year. Certainly some of that is around speculation for the ETF, but it's also because there's greater awareness of what the asset can do. And also, and I think this is probably one of the most important points, this is a new asset class. We haven't had a new asset class for financial portfolio allocation in quite some time. And with a new asset class comes lower correlation to the other asset classes previously allocated to. And so if you have lower correlation with strong upside potential, mathematically per unit of risk, you actually have a more diversified and actually greater upside potential for the risks that you're taking. And we think that's attractive to overall portfolio allocation. Even if investors only size this as relatively small allocations, it can have an outsized impact.